So we're going to continue our discussion about journalizing transactions by focusing on transactions that affect owner's equity and receiving cash on account. We're going to look at first transactions that affect owner's equity when we sell services on account. So if we look at a transaction, August 12th, sold services on account to Oakdale School for $350. That transaction was recorded on a sales invoice number 1. As we have done in both chapters 1 and 2, we're going to break that transaction down into the components or the accounts that are affected by that transaction. So we're going to ask ourselves, what accounts are affected? We have sold services on account. So we know that sales are affected, and in this case we sold them on account, so we have account receivable, and in this case it's Oakdale School for $350. In the past, when we did a T account, we recorded that by increasing our accounts receivable, which is an asset, and increasing our sales, which is an owner's equity account. We record, as we discussed in the past, we recorded increases to assets by debiting them and increases to our owner's equity or sales account by crediting them. Now, when we journalize this transaction, we're going to put it into our journal first by putting the date. Then we're going to put the debit part of the transaction in under the account title, and we'll record the debit amount in the debit column, and then we'll record the credit to our sales by slightly indenting our sales in the journal under the account title, and then recording the credit amount of $350 in the credit column. We then record it on S1, which is our receipt for our sales, by writing the source document in the doc source or document number column in our journal. And that's all there is to recording a sale on account. Let's moving along, look at how we would record a journal or journalize paying cash for an expense. When we have the transaction on August 12th to pay cash for rent, $300 on check number 4. If we analyze that transaction, we know that the cash account is affected and rent expense are affected. What type of account is rent expense? Well, rent expense is an owner's equity account, and cash is an asset. What's happening to those accounts? Well, our rent expense is going down. Pardon me. My rent expense is going up. My rent expense, I'm sorry, I got interrupted. My rent expense is going up, and my cash is going down. So if my rent expense is going up, the normal side balance for an expense is the debit side, so I'm going to debit my rent expense. The normal side balance for cash is also the debit side, but since my cash is going down, I'm going to record a decrease in my cash by crediting it. To record this transaction in our journal, again, we would start with our date on the 12th, and we're going to debit our rent expense, so we're going to put the rent expense on the left side of the account title column. We're going to record it as our doc source of C4, and we're going to debit our $300 rent expense. We're going to record our cash for $300 as a credit. We're going to slightly indent that cash in the account title column to show that we're crediting it, and then we're going to credit our cash for $300 by entering a credit in the credit column in the journal. And then lastly, we're going to put our source document, check number 4. Now, when we receive that cash that we had entered before into the account receivable, now we've got to show how would we affect the accounts in that transaction. So on August 18th, we received cash on account from Oakdale School for $200 on receipt number 2. What are the 2 accounts that are affected? The 2 accounts that are affected are cash and accounts receivable Oakdale School. What types of accounts are they? Cash is an asset, and Oakdale School accounts receivable is also an asset. Well, what's happening to those? They're both on the same side of the accounting equation, so we know that one has to be going up and one has to be going down in order for the accounting equation to stay in balance. So if we know that we read the words received cash, we automatically know that our cash account is going up. So if our cash account is going up, we're going to debit our cash account because that's the normal side balance for our cash account. And if our cash is going up, we know that account receivable Oakdale will be going down because they're both an asset, so one has to increase and one has to decrease. So if our account receivable Oakdale is going to be going down, then we're going to credit the account receivable to Oakdale School. And this is going to journalize as follows. Record on the 18th, the date. Then we're going to put our debit over on the left side of the account title column for cash. And we're going to record the dollar amount in the debit column under cash for $200. Then we're going to record the credit part of the transaction by recording the accounts receivable Oakdale School at $200 in the credit column because we're reducing the accounts receivable by $200. And of course we slightly indent the account receivable Oakdale School because we're crediting it. And then lastly, we put the doc source, which is receipt number 2, in the doc number column. Now let's record the transaction for paying cash to the owner for personal use. On August 18th, the business paid cash to the owner for personal use. What are the two accounts that are affected? We know that cash is affected, and when we hear the words owner for personal use, we know that the owner's drawing account is affected. So in this case, it's Kim Park Drawing. Well, what's happening to our cash account? That's the easy part of this transaction to analyze. We know that our cash account is going down because we hear the words paid cash. So if our cash account is going down, we automatically know that we're going to be crediting our cash account because we decrease our cash or our assets on the credit side of the T-chart. Our Kim Park Drawing, that's an owner's equity account. Kim Park Drawing as an owner's equity account, the normal side balance for the drawing is a debit because the drawing account reduces our owner's value in the business. So in this case, we're going to record Kim Park Drawing in the drawing account on the debit side. And this journalizes as follows. We're going to record the date on the 18th in the date column. Then we're going to record our debit to Kim Park Drawing by bringing our title for Kim Park all the way out to the left and entering the dollar amount for the 125 into the debit column. Then we're going to record the credit to the cash account to show that we decreased our cash by $125 by slightly indenting our cash in the account title column and recording the $125 credit in the credit column. Lastly, we'll write the doc source number, which is C6 or check number 6, in the doc number column. And that takes us through section 3.3 of chapter 3. Now we will move on to section 3.4. In section 3.4, we're going to focus on starting a new journal page and correcting errors in the general journal. First, when we have a completed journal page, a couple of things to keep in mind. When we get to the bottom of the general journal page, so if you see the top half of this page, you see the dates August 1st, August 3rd, August 4th, so on and so forth, a little gap, and then we go and we scroll down and we see that we're at the 20th, the date of the 20th, and we see that supplies were debited and accounts payable were credited. We see that we're on page 1. We also see that we only have one line left on this page. We don't have two lines left. Therefore, we cannot start a transaction on this page because we know that all transactions have at least 2 entries, 2 accounts that are affected. You cannot split a journal entry between 2 pages. So therefore, we must move our journal entry to a new page. Okay, we cannot start a journal entry where one part of the journal entry is on one page in our general journal and the other part is on a different page. We will move to a new page. Therefore, we would start a new journal page by simply writing the page number. So in this case, it's page 2. And then we would begin any new transactions on the first line of the new journal page. And that's all there is to beginning a new journal page. You must just simply keep that rule in mind that you cannot break up a journal entry. Journal entries must be together on a new page if there's only one line left on the bottom of a page. Okay, so now what do we do if we have some errors that we make in our journal? This will summarize how we would handle or correct errors on a journal page. First, if there's an error, we're going to cancel it by drawing a single line through the incorrect item and write the correct item above it. So if we look in example number 1, we wrote in the wrong dollar amount. We wrote in $11,900, and this should be $1,190. So we would just simply draw a line through the middle of the error, and then write the correct amount above it. The reason that we do not erase is so that in the event if later on we have to ever follow anything back in terms of tracing down an error, we would have that information still available to us by just simply drawing a single line through it, as opposed to erasing or scribbling out the information. So we just make sure we draw a simple line through it and write the correct number above it. It provides us with what we call an audit trail. Second type of mistake, there's an incorrect entry. So in this particular case, we wrote miscellaneous expense, and it should have been on the 27th a utility expense. So in this case, if there has been no entry between the error entry and the new entry, we would just simply cross out with a single line the incorrect entry and then rewrite the correct entry below it. Third error, if the entire entry, incorrect entry was followed by correct entries, then what we would do is cross out the incorrect entry and correctly write it above the entry, write the correct entry neatly right above the incorrect entry. So if we look on error number 3, you can see how the dollar amount we wrote was $20 and it should have been $200. So we again simply write a single line through it and put the correct number above it. We can use abbreviated words where permitted. For instance, we could use MIS to stand for miscellaneous expense, or A/P to stand for accounts payable, A/R to stand for accounts receivable. The fifth item to keep in mind, dollar and cent signs are not used on the ruled paper that we use in the general journal. So this is ruled paper, meaning that there are lines to distinguish dollar amounts and lines, columns and rows to distinguish the information that should be entered. So we do not use dollars and cent signs. We put the numbers in the ones, tens, and hundreds and thousands places. And lastly, we can use a straight line across the cents column to indicate zeros. It's sometimes a little bit neater and a little bit less confusing. You've seen me do that in the working papers during class. So you can use a straight line in the cents column instead of using the double zeros to represent the cents. And that's it. These are the terms that we need to know for Chapter 3. Thank you.